Hey, this is the Mortgage Minute for Wednesday, July 7th. I told you guys when I started this that I'm going to be taking headlines and words out of the headlines and helping them make sense for you and what it means to your interest rates. Well, here's a word that I want everybody to look for in the upcoming months. You're going to see it a lot, and it's going to be one of those words you heard about, but really people don't really understand a lot. Austerity. Pretend austerity program is not a solution. Globe Mail today. You're going to hear a lot of talk about that. The G8, the G20 met last week, and the big topic was that governments like Britain and France are saying, well, we've got to stop spending. We've got to impose austerity programs. So in other words, they got to stop doing the spending that they did a year ago. So why are they stopping what they started? Well, a year ago, they had to get everybody off their duff and spend money, so they had stimulus spending. Absolutely ridiculously record high government spending. Why do you think we have HST in BC? Because someone's got to pay for the deficit financing to get us, that got us out of the recession. So now, okay, we're out of the recession, the economies are booming, but now Europe's saying, wait a second, we spent our way out of the recession, now we've got record deficits and we got to slash spending. Here's what it means to you as a homeowner and your interest rates in Canada. We saw the Bank of Canada raise rates in June. They're probably going to raise rates again by a quarter point in July. And the reason they raise rates is to cool down inflationary components. So if the economy's humming along, looks like it's doing great, and we have the potential for inflation, they'll start to raise rates. So a lot of people are concerned, yeah, that's just a start, and interest rates are going to keep going and going and going. Wait a second. Think about it. It was the stimulus spending and inflationary components that created the humming of a good, healthy economy. That's why we have to raise rates. Now all of a sudden Europe is saying, whoa, we got to implement austerity programs. That's going to actually create the opposite effect. It's going to slow down the global economy like we spoke about before, which means Canada, not being immune to global influences, will be impacted. Our economy will be stifled a bit. The economic growth we've had will slow down because of austerity programs in Europe. The caveat here occurs, the wild card in the mix is China and India and the spending that they're doing. But my prediction is that a change in spending habits in European countries will slow down Canada's economic recovery, which means the spike in interest rates that everybody's expecting will not be quite what we thought. That's the Mortgage Minute for July 7th. Hope you're enjoying the sun and have a great day.